You're right there, guys. Hello to everyone. So we are going live officially. Welcome to you all. Um, a few bits to kind of go over. Obviously, it's been a very slow week this week, but structure has been forming, which is amazing. So the outlook for next week is looking good, especially obviously we had a slow week this week, well, especially a slow week this week and a relatively slow week last week. A lot of price manipulation, a lot of accumulation, distribution occurring. So the wait should be over and done with by next week. Fingers crossed. So yeah, we're all good. Hello, hello, hello. So, we're going to go over some economic data points that we have kind of come out this week. So we'll kind of go over that and what it means. We'll then also go over some news that is circulating at the moment, which could be impacting, and it's kind of also feeding into the market sentiment. Why is the market setting up the way that it is? And now the introduction of this news, putting it both together, then we should kind of build up a scenario from that. So we'll actually go over kind of what's happening in terms of price action right now. So we're just building up on what we got this morning in terms of our TradingView market update. Also, just wanted to mention, obviously, the quality of the stream isn't too great, and we do apologise for that. However, it will be sorted in the next couple of weeks. We are getting our connection sorted on this end, so moving forward from that point, things will be a lot better. Right, okay, so so let's take all the TA off at the moment. So building up on what we said this morning in terms of the range that price is kind of sticking to, right? So as you can clearly see, we got a prop up to the top of this mid sort of range, and this is the top of the range, right? We got another mid range on the lower bound, and then we got the full lower point of that range. So clearly it's just gone up. It's tested. Again, as you can clearly see, even on this leg up on the daily, where is the volume? The volume isn't even as large as what we got in terms of the sell-off yesterday. So it's just clearly indicating that the sellers are here to stay. However, they need to get more liquidity. Obviously, it wasn't enough liquidity yesterday to make that break of the bottom of the range. So what's happened is that they've just turned price around quickly. Gave us a large green candle, enticing these bulls to come in, take the decision as, right, that's the bottom. I've just seen a huge push up in a green candle with increase in volume. Right, I'm going to get in long. This is the bottom. But as we kind of go along this stream, you'll kind of also understand the fundamentals or the news that is now starting to very slowly feed in into the market and just out and about. That's going to add one, fear to the market, and two, actually bring in that necessary liquidity and move to make this break of the 40,000. So currently the problem that we have is that there is a lot of support at this key level of 40k. A lot of people are calling this the bottom. So there is a lot of mixed emotion in the market currently. So it's making it difficult for shorters to break this level. So there's going to have to be an excess amount of liquidity on the short side to make this break. But once we do get that break, we will be moving down levels very, very quickly. It's going to be a very quick move, and we're going to get a turnaround just as quick. So, one, what's the sort of theory or sort of thought process, reasoning behind kind of saying once price moves down, one, price is going to be moving down very quickly, and then two, the rebound's just going to be at just as quick, and that is because one, we're already holding this level very well. Okay, there's a lot of already mixed emotions, so if people are willing to buy at this level and start putting orders at this level, imagine how much more they're willing to put orders down at this level here. So you're making, what is it, 25-30% right move from over here. So it's a difference of 25 to 30% just from where you're already willing to buy to where price is going to come down. Okay, so the next major level. So there's going to be a lot more buyers coming into this market right here. So even if you think of the side, right, right, I'm not going to enter at this level here. Price can move down. I could get it cheaper. Once price is actually at this level here, now your thought process is, right, this is much cheaper than a place that I was already thinking about putting it in, but I was already thinking that it's going to come down, and it has come down now. So I'm now going to get involved. So this fast move down and a quick uptick back up is going to entice a lot of people and sort of kind of bring in that bullish sort of liquidity into the market that is needed to then actually kickstart the next leg up towards these all-time highs. So if we go over to the 4 hour, and we'll bring back our TA from this morning. So price has come to this order block over here. So obviously we spoke about in our TradingView post this morning that there's a lot of orders around circulating around this area over here, right? So it would be quite difficult for one, bulls to break this level and actually break up all the way to the top. Regarding that, there is already little volume in the market, right? So realistically, because there's a lot of concentration of orders at this level, price is going to naturally find resistance here. Okay, so we can even add this order block over here where price has actually tapped into liquidity back here and made that larger turnaround to the bottom of the range, right? So all that's happened is that we got a nice leg up. So volume's upticked, which is great, which is exactly what the institutions want, is that uptick in volume, the introduction of now these bulls. All it is that they're manipulating the bulls to think, right, this is the bottom now, because one, this is already a key support zone, okay? It's already touched how many times? 4, 5, 6 times. All right, now I'm getting this huge, a huge increase of volume compared to the average. All right, this is going to be the bottom. A lot of people are going to be calling this the bottom and going to be getting involved once prices reach these bottom levels, which is exactly what you've just seen now. Okay, but look at the turnaround that we've already getting. If this was such a influential sort of push up in price, we would have got the push all the way up to the top of the range. This is not the case that we got. Okay, so all they're doing is going to be moving price up and down between this range, okay, and just catching out traders. They're going to get, what the institutions want is to gain as much liquidity in a short range of price, okay, and that is what they do in these sort of consolidation sort of phases. They're just accumulating, distributing orders, right? So if we get, for instance, our accumulation distribution up, all right, you can clearly see what's happening here, right? Okay, you can clearly see there's accumulation here, and then they distribute it. They've even distributed in this little space over here, push price all the way down. Now they accumulate a little bit. Okay, look at the accumulation on this leg up. Very minute amount of accumulation compared to this move over here. Okay, so this whole move over here, if you can remember, was when it was when, so this move up and this move down, look how big they are. That's just a clear manipulation to a move. They're moving price up and down very quickly to catch people out, to liquidate people, and to basically squeeze shorters and bulls. But So for instance, why are we now saying that obviously next week should be the end of this slow paced moving market? For instance, right now we're seeing these waves of accumulation, distribute, and tightening now. Okay, so there's less of it. So they've already started to position themselves all along here, where you can see accumulation, distribution at high levels. Okay, so now it's tightened up. Okay, and that's what we're getting here. They're just going to keep on moving a little bit, but they're already positioned. All they're doing is just getting some extra liquidity at these ranges over here, but they're already very majorly positioned at this first half of this range. Um, so that's kind of what's happening. We will come back to the chart and kind of dive a little bit deeper into it, especially we'll go over the other major charts. But so we wanted to go over the economic calendar for this week. So obviously we already posted about the inflation rate. So inflation rates were always going to be expected to be high. However, obviously they come out as bad news. It causes volatility in the market when these price points come out, because you need to be thinking, right, the institutions already know this information, okay, because one, they have insider information, they already naturally know, so they're already priced these moves and data release points prior to the actual release of those data points. But then you get the whole retail market, okay, or the dumb money, not necessarily the whole retail market, but the people that haven't got much experience in the market, are just getting started, and wait for these data release points, okay, to actually take a decision, right? So that is a lot of volume in itself. It's not the biggest volume. Obviously, the institutions and the whales hold the biggest amount of moving volume. However, you always get some sort of reaction when the data points released, because everyone then has that information, right? So, for instance, okay, we'll cut out Australia, China. Wanted to touch on, where was it? It was the UK. If we go to, where is it? Not today. Go last 7 days. So where are we? So we got a lot of speeches, especially from Europe. Obviously, we've got. Let me refresh it because it's not loading up. But UK inflation was something like 5.4%, which is huge. Okay, so not seen inflation at that for a long time. So they're having that problem. The United States are also having that problem. China's also having that problem. China's actually seeing a little bit of a slowdown, which is surprising. So things are kind of really kicking off in this first quarter. We had Japan still in negative interest rates. Okay, so everywhere's kind of dealing with this pent up in inflation differently. So let's say, okay, so we got GDP year on year. Okay, so naturally that's going to be larger. So we've got forecast of 7.5. We've got an actual figure of 8% year on year. More important ones, month on month, year on year. Obviously, we were in a pandemic last year. This year's been a bit different. So naturally, we're going to get higher GDP, right? Because things are actually more so back to normal this time round than they were last year. Okay, but we've got balance of trade, which is huge. Okay, huge increase. Wanted to show, where's inflation? So inflation for France, okay, which is now the second biggest economy in the EU. Now that we are out, I think France and the UK will kind of join. Obviously, Germany is the top, but inflation's been quite steady in France. They're doing quite well. So the EU has got a whole different set of problems that it needs to deal with, and they are tackling it in a different manner. Yeah, I wanted to show you. I wanted to show you the UK inflation data points. We did send them in, but we can't get them up. So we'll move on to the next one. In terms of today, there should have been a speech, and we will update you on that speech. We'll send it into the premium channel. It was a European speech, or the ECB speech, which is quite important. But we just wanted to touch on a few headlines. So obviously we got this whole US, Russia, Ukraine situation, NATO, and that's brewing up. So that's something to kind of keep your eyes on for sure as time moves on, because that's going to majorly obviously impact kind of the markets. That will give us a shakeout in the markets for sure. Obviously we got troops taken out of Afghanistan and Syria, and by the looks of it, these troops are now going to be put back into Ukraine. There is a lot of friction being caused. Putin is kind of basically giving zero fucks, and is kind of brewing up a bit of friction between the US and obviously Ukraine. Obviously, this Ukraine and Russia situation has been happening for years now. It kind of got swept underneath the rug for a little bit. Things kind of chilled out, but obviously they've kind of resubmerged in recent times. So things are brewing up, and that will cause some volatility in the market. So today, Russia is definitely not failing with obviously hitting the headlines, but let it load up. I clicked on an ad. So Russia proposes crypto crackdown. Bitcoin's reaction, no problem. Okay, so what we wanted to touch on was how, like, realistically, Russia, in terms of an economy, right, in the globe, they are big, but they're not that big, okay, compared to, let's say, China and America, that have a lot more involvement, especially in the crypto in the crypto sort of market. However, Russia as a country, obviously, if they're now putting stuff out like this and completely cutting out, in terms of obviously crypto mining, that is big in itself. So what we're thinking now, and we'll move on to the other headline, right? And this is already a slow drip feeding of bad news, all right? So it's already, it will start to pick up, and then it will just end with a huge headline that is mainly very much impactful in on crypto, and what will happen is that it will just exacerbate that move down. Okay, this is just a slow drip feeding as for what's to come in terms of bad news for crypto. So obviously the bit says Bitcoin's reaction, no problem. Yes, we've had no problem. It's bad news, but it's not like, let's say, the US. If we swapped Russia for the US, crypto would have gone down probably even past 30,000 if that was the case. Okay, US are the main sort of players when it comes to crypto mining now. Obviously, they took over as soon as China decided to crack down on the mining. Okay, US just simply went and filled in that space very easily. Okay, so now they're the main players when it comes to it. So now anything in terms of US and crypto, okay, that is it could be amazing news, it could be bad news, but on either side of the coin. If it's good news, amazing, that will push price up a lot more than, let's say, if you had a small country with little involvement in crypto, okay, giving out good news, okay. So we don't really need to go through all that's being said in the article. It's just touching on, obviously, the actual headline. We did send this article in to the news group. So obviously the news group is free, available to anyone to join. Just if you follow us on our free group on Telegram, you'll be able to find, obviously, the link to the news channel in there. So next headline that we wanted to touch on is obviously Bitcoin mining's hearing in US House questions power usage. Okay, so this was the main point where we got a huge sell-off in crypto, was the whole problem with how much power and energy mining Bitcoin uses, and how bad it is for the environment. Obviously, this whole environmental issue and crackdown, just in general, in terms of obviously fossil fuels and how we are just bringing our carbon footprint down, okay, is more and more important. And obviously we're seeing a kind of shift, or a kind of more sped up shift, in terms of how we're reaching that carbon neutral sort of place. So this is the main reason why we got the huge sell-off, okay, and now it's already coming back, okay. So this is why we're saying we're starting to get little seeds being planted already in terms of bad news. And what's going to happen is that and I guarantee you, it's most probably going to be something to do with power usage once again. And there's probably going to be some sort of restrictions or something, or like there's going to be a date that something needs to be done by. More than likely, it will be something to do with power. If not, then there's plenty of other things that you can kind of pick on in terms of crypto, in terms of regulation, in terms of anything like that. That's enough to push things down and give that extra push to drop prices down. So again, regulation is a huge sort of grey area that needs to be filled and needs to be explained, and needs to have direction being put into the market as we go into 2022. But yeah, so this is huge, right? So a US House subcommittee hearing on cleaning up cryptocurrency and the energy usage of blockchains kicked off Thursday, with one representative calling the energy consumption of some Bitcoin mines deeply concerning. Okay. The hearing comes as the outsized power consumption of cryptocurrency miners increasingly questioned by politicians and climate advocates. Mining companies run thousands of computers to solve the calculations that underpin certain cryptocurrencies, especially Bitcoin and Ethereum. Okay. Republican Diana DeGette, a Colorado Democrat, okay, so it was said in her opening statement Thursday that blockchain technology has promising applications, but mining, energy efficiency, and carbon emissions need to be at the forefront of any discussion about crypto. Lawmakers specifically raised concerns about the repurposing of old coal plants in New York and Pennsylvania to support mining operations. So, I mean, that's not exactly moving forward, really, if you're having to that is a good sort of filling in terms of using old fossil fuel sort of plants and switching them over to obviously mining Bitcoin. However, that's still not really solving the issue. All you're doing is just kind of not wasting space. You're just reusing the space that is already there, which, I mean, one is going to lower costs majorly, which is great. But again, the main issue that needs to be taken is the energy that that is required to obviously compute these calculations. We cannot bring retired fossil fuel plants back online or delay the retirement of some of our oldest and least efficient plants in support of energy-intensive crypto mining. Okay, so the exact same point that I was saying. A report cited by the subcommittee estimates that together Ethereum and Bitcoin mining operations emitted more than 78 million tons of carbon dioxide into the atmosphere last year, an amount equivalent to the annual tailpipe emissions of more than 15.5 million cars. I mean, when you look at it in the grand schemes of things, it's not major, but obviously it is a problem, especially if you're thinking of cryptocurrency as the future. It's something that obviously needs to be dealt with, and you don't want obviously the emissions to be growing and growing. You kind of want to be offsetting it in some shape or form. There isn't a clear solution as to how they're doing that. Obviously, if you also look at the greater picture, governments in general don't like cryptocurrency. Okay, so in any way or form that they can kind of tackle it, they will do so. Until they're obviously well positioned and they've got kind of a piece of the cake, where then they can make decisions to benefit themselves. So until then, you will get a lot of this sort of bad news on cryptocurrency in general. But yeah, that is obviously the fundamentals that we kind of wanted to touch through. Just kind of give you a picture as to what's happening. So positioning. Okay, now we're getting bad news coming in. Okay, so what's going to happen is that once liquidity kind of gets built up, more than likely we're going to get something even as simple as a tweet that's negative from someone really important, or something as big as regulation around Bitcoin mining in a large economy that's kind of mainly involved in crypto, and that will give it its extra push to move things very quickly to the downside. So mixing the motion, we're in a range, low volume, okay, and then we're seeing these moves, these huge moves up or very quick moves up. It's just to entice traders to come in and go in long. So expect choppiness in the market, and cutting out people on either side. So how should you tackle this? Just add to margins. Okay, just add to margins as price moves up, as overall sentiment is bearish. So all you have to do is just keep on adding. So we'll go over to total crypto market cap. So same sort of structure. The one thing that we kind of wanted to touch on is obviously this 50 moving average about to cross it over with the 200 moving average. Obviously, that is a death cross. We already got that on Bitcoin. It's just materializing. So let's see what happens when total crypto market cap crosses over as well. That is huge. That is probably when things will start moving to the downside much quicker. So in terms of obviously going through the TA and total crypto market cap, it's just the exact same as Bitcoin. We've done an update this morning, so everything's over there. Obviously, we're already testing that order block, the current order block that is rejected and moving down, but still not seeing amazing introduction of volume. Obviously, we got a test of this 50 and 100 moving average, and now we're actually pulling back. So we could just get a little pent up to the top over here, and then continuation to the downside. So again, we're just going to be moving within a range, just like over in Bitcoin. Bitcoin shorts have now fallen a bit, so they've pulled back naturally. Obviously, on a Thursday, Friday, over the weekend, we are going to see a reduction in shorts. Obviously, as volume kind of tails out of the market, but from that, again, just like we said in our previous live stream, that is a change of sentiment. Okay, normally we get price pull back. So during the whole week, we get an increase in price, and then between Thursday and over the weekend, we get price pull back as volume tails off. Now we're seeing the complete opposite, right? We're seeing price come down on the days that we have the largest volumes in the market, and then we have price push up and basically correct or pull back, sorry, when we get the lower volume days. In terms of Bitcoin dominance, obviously again still in a range, just like we said. So it's just going to be ranging for a bit until we get this huge push up, and then or the big move in price, and then we'll see the same happen with Bitcoin dominance. Naturally, obviously there's more altcoins, and they hold more of the market than Bitcoin does. So when we get a huge sell-off, obviously the rest of the altcoin market will sell off. So naturally you will see Bitcoin dominance kind of push up a little bit, okay? So dollar index, okay, still holding on to that level. We're actually getting a push up, which is great, okay, which again is going to bring either a slowness to the market or more of a bearish sort of move in terms of Bitcoin. So there's normally an inverse relationship between the dollar index and Bitcoin. So obviously investors move money between both, okay, and kind of capitalize on simply just moving from the dollar to the to Bitcoin or to crypto in general. So yeah, in terms of that, that's all that we wanted to go through in the market and giving you a picture of the overall market. We touched on the majority of the bits, but going obviously into the last day of trading tomorrow and the weekend, obviously volume is going to be turning off. We might see a little pent up in price pushing up, but we are going to be playing within this range, and then kickstarting next week, we should see a bit more volatility come into the market, a bit more volume coming into the market, fingers crossed. But the way to play it is by those increases in prices, as the overall trend is bearish, and I mean hugely bearish. The news isn't great that's coming out, and it's already starting. Okay, so they're just going to naturally bring out more and more worse things coming out, and then more and more sort of bearish moves. They're going to bring in a bit of volatility, liquidating and squeezing people out of the market in this range until they have enough liquidity to make that big move. But yeah, so in terms of that, that's us done. If you've got any questions, so actually, firstly, one, have you got any questions? And then two, if you want us to do any TA on any other crypto, just let us know in the comments. We'll smash through some of them for you. If you have any queries as to what's happening on certain cryptos, just let us know. I'll give a couple of minutes for that. If not, we'll shut it off, and then we'll see you tomorrow morning for some TradingView posts on the final day of trading this week. Cheers, my man. No problem. We'll keep you guys updated every step of the way. It's important to obviously stay in touch with what's happening in the market, as Bitcoin is an extremely fast-paced market. So that is so it's called an accumulation distribution indicator, right? And we tested out a few of them, but this one is the best in terms of actually dictating when it's in a accumulation sort of phase and when it's in a distribution phase. There is just a simple accumulation distribution phase, which is literally just a line, but it's not giving you a mid kind of point where it's showing you switching over from accumulation to distribution. So if we so it's called accumulation distribution with markers. So if you go over to indicators at the top just here, and you type in accumulation distribution, it is there's a whole load of them. I'll find it for you. Yeah, so if you type in accumulation / distribution, it's this one here by Dov Caspi. It gives you the markers, which are the little red dots, but it's just mainly giving you a center point, okay, where it's telling you whether it's in accumulation phase or distribution phase. But yeah, it's very much important, okay. So the indicator is more, so you don't really use it when it's in trend, okay. It's more for when it's in these ranges, okay, to actually kind of tell what's kind of going on behind the scenes and how the institutions are playing the move. And then the way you read it is obviously by how big they are, and then the changes between how big and then how tight or how small they are. That's how you read it. To be fair, next week we'll put out a video on accumulation distribution on our YouTube. We'll add to that learning playlist to kind of give a bit more clarity as to how to use that indicator, but it's very, very useful. We did have the RSI on here, however we scrapped the RSI. It doesn't really work that well. It's better to just look at the price action and then just go from there. Look at price action, link it to volume, and then obviously the TA that's happening in terms of order blocks and everything else. Like you can have the RSI indicator, right, and it's telling you that it's overbought. Okay, the price can be in overbought for a long period of time, but the way that you look at it is, okay, it's been in overbought for this time, and then you make decisions on that. But then obviously that's not the only way that you use it. Obviously you look for divergences as well. But again, it doesn't work that well. So we scrapped it. We just use accumulation distribution, and then we use our indicators in terms of trend lines, order blocks, and then just simple TA sort of structures. So yeah, simpler the better, really. But obviously you want to be using stuff that helps you understand what's happening behind the scene and how the institutions are playing things. You kind of want to be 2 steps ahead and you want to be with them. But yeah, so in terms of any more questions, if you guys got any more questions, feel free to ask. That's not an issue. Or even any TA. I know we do TA every single morning anyway. We'll send you guys we send you 5 charts every morning on TradingView, so you kind of get your fair share of TA anyway. No, I'll give you 2 minutes. If that's it, then we shall love you and leave you and see you tomorrow morning. Right, okay then. Amazing. Yeah, we'll see you tomorrow morning just for the final update on the market and a few other little bits of TAs on other crypto before we enter the weekend. But yeah, thank you for listening, and we'll see you tomorrow. Bye.